I just lost 90% of my ULTY shares. The reverse split hits Monday, but here's the part nobody expected. ULTY just did something it hasn't done in a long time. It didn't lose money this week, and ULTY actually recovered every dollar of the dividend paid out. This might be my most important ULTY update yet.
Here we go.
And a quick reminder, none of this is financial advice. This is just what I am doing with my money inside of ULTY. Welcome back, dividend stackers. If you're new here, this channel documents my journey building weekly income using YieldMax's ULTY ETF with margin, drip, and real life decisions along the way. And real quick, if you're getting value or just simply plain entertained from this journey, hit that subscribe button so you don't miss these weekly updates. Now let's jump into the numbers. All right, so let's go line by line because this is the final update before the ULTY reverse split update hits on Monday, and that's where things will get real. Up on top, ULTY closed the week at $4.03 exactly, and my cost basis now sits at $5.49 with the break-even price of $4.72. My share count currently sits at 2,764 shares, and that's the last time you'll ever see those numbers in the thousands. Unless, of course, I continue to drip and buy more ULTY. After Monday, I dropped to around 270 shares. That's a 90% share deduction. Not a loss in value, just the mechanics of the split. My cost basis sits at $15,182.60. And my dividends received now sits at $2,148.31. That number continues to climb even in a brutal NAV downtrend. Now here's the important line. My market value sits at $11,138.97. My total cash invested, which includes my out-of-pocket and dividend, sits at $15,182.60. But my total out-of-pocket is only $13,034.29. As stated, the dividends I've received, $2,148.31, and that puts me at an unrealized PML of $4,043.63 for a negative 26.63%, which is an improvement from last week. My true gain, including dividends, now sits at $1,895.32 for a negative 14.54%. For the total monthly dividends, I sit at $693.84, and that's it for November. And that is a steep drop from October. However, you have to remember, October did have 5 paydays. But taking into account the lower dividends that ULTY has been paying, it still would have been less. You definitely can see the dividends per share dropping steadily, now sitting at the lowest amount ULTY has ever paid, at just under 6 cents. That still paid me though $161.93, and that all again was ROC. I did go ahead and continue my drip, buying 38 shares for $3.97 each, all taken as a manual drip from the $161.93 I received on November 27th. Sitting so close to the year end, this is where I definitely need to make sure I keep an eye on my taxes. My after-tax dividends year-to-date are sitting at $2,044.40, and I am estimating $103.90 in taxes. That is money that I'm saving for Uncle Sam come tax time next year. For my margin use, I have an equity of $10,537.64, and I am using $601.33 for a Robinhood buffer of 62.91%, and I am not paying any interest on the first $1,000 that Robinhood Gold gives you for free. Now, welcome back to the 601.33 cents, as there is some option plays that my margin is currently holding. So that is the full spreadsheet update line by line, and this is the last update before all these numbers completely change next week. On Monday, my share count will drop by 90%, but the value will stay the same and the income engine continues. Now, more than likely, what I'm going to be doing with my spreadsheet is consolidating all these numbers on what Robinhood would show and then take it from there. So that may be something that I go over next week. It's time for the macro minute. Before we break down Monday's reverse split, let's run through everything that happened in the markets this week because the macro environment is actually crazily bullish going into ULTY's biggest moment yet. The stocks explode, bulls rule a big week. Let's start right here. Investors Business Daily is calling it a powerful week for stocks. The Dow jumped 3.2%, the S&P ran 3.7%, and the Nasdaq ripped almost 5%. The key indexes all reclaimed their 50-day lines. That's a big signal that buyers stepped in hard. But Nvidia didn't bounce. Nvidia actually hit a 2-month closing low. And anytime Nvidia lags, volatility tends to kick up, which affects option premiums for covered call ETFs. Black Friday record sales. Next, look at this. Reuters reports US Black Friday online sales hit a record $11.8 billion. This tells you the economy is not slowing down the way analysts predicted. Consumers are still spending, liquidity is still in the system, and markets love that heading into December. 2 major articles confirm it. Now here's something big. Goldman Sachs and Reuters both reported that oil prices are expected to fall through 2026 due to a global supply surge. And this is huge. Lower oil, lower inflation, less rate pressure, better conditions for the stock market and for income ETFs. Energy staying tame makes Monday's reverse split environment much less risky. Stocks and Bitcoin were up, investors betting on rate cuts. Now about the risk appetite. Reuters say both stocks and Bitcoin are edging up because investors are betting on Fed rate cuts. Lower rates equals lower yields, equals more liquidity, equals more risk on behavior. And that is exactly why Bitcoin popped towards 93,000 this week. When Bitcoin runs, liquidity runs, and volatility tends to increase, which is exactly when option income ETFs like ULTY generate their best premiums. Gold climbs, a safe haven plus rate cut signal. Gold also spiked to 1-week high. Why? Because markets expect the Fed to start cutting rates sooner rather than later. When both gold and Bitcoin rise together, that tells you investors want safety and speculation at the same time. That's the perfect cocktail for volatility. So here's what all this means going into Monday. Stocks are ripping, consumers are still spending, oil is projected to stay cheap, Bitcoin is heating up, gold is moving with rate cut expectations, volatility is increasing, which is good for options premium. This is honestly one of the best macro environments YOLTY could walk into for a 1-for-10 reverse split. And that's your macro minute. Hey, and if you got value out of that, hit that like button, comment below, let me know where you think the market's going next week. All right, real quick, let's go over my SPY trades for the week because I've been getting a lot of questions about how I'm using TradingView and these indicators. And honestly, I might open up a members only section where we share setups and ideas. So comment below if you would want that. During my breaks at work, I've been taking some time to study the market using TradingView. The indicators don't replace strategy, but they give me a great directional bias and help me see the rhythm of the moves. This week, I made $375 trading SPY options, and this is exactly how they played out. On Monday, I took a 664 call and the momentum pushed in my favor. I locked in $73 in profit. On Tuesday, I held a $667 put from the day before that opened out of the money, but the market flipped, moved hard in my favor, and I ended up adding another 668 put. Those trades paid me $201 and $69 back to back. On Wednesday the 26th, I jumped into a $678 call strike. This one was wild. It broke down first, then reversed and skyrocketed. I took a $32 profit, but honestly, if I held longer, it could have been a $200 winner. But hey, I'll take whatever the market gives me. I can't be greedy. I also can't complain. That puts my 2-week option total at $742. Which I'm really happy with, especially trading during breaks and lunches at work. Lastly, on Friday, I took a little speculative swing on IBIT with a $53 call. It cost me $176, and right now it's down about $50, but I bought 2 weeks of time on purpose. I'm basing this trade on the same TradingView indicators, so I'll update you next week on how it plays out. And I could only take about 3 trades a week due to the PDT rule. And honestly, that's probably good. When I was in a cash only account, I was constantly making lots of trades that wouldn't work out. And revenge trade, it's a real thing. If you like this part of the video, the trades, the breakdowns, the real numbers, hit the like button so YouTube pushes it out to more people. And comment below if you want me to create a members only space where we can chat setups, indicator signals, and potential plays for the week. I can absolutely do that if there's enough interest. And that wraps up the SPY trades. Now let's get back to ULTY and what I'm expecting after Monday's reverse split. All right, now let's wrap this up with the big one. ULTY's 1-for-10 reverse split goes live on Monday. And yes, that means my 2,700 shares shrink down to around 270 shares. But remember, this doesn't change my ownership stake and it doesn't magically erase or fix anything. It is basically a share structure reset. So here's what to expect when the bell rings.
Scenario number 1,
a clean open, which is most likely. Price adjusts instantly into the $39 to $40 range. Trading is normal. Volume comes in clean. Scenario number 2, a chaotic open. Totally possible. Reverse split tickers sometimes get wild at the open. We might see quick wicks up or down before things stabilize. That's totally normal. It's not manipulation. It's just the algorithms recalibrating. In scenario number 3, the liquidity gap. We may see wider spreads early in the morning, especially for the first 15 minutes. Then the market makers tighten things up as options refresh. As far as dividends after the split, the yield stays the same as long as ULTY continues to pay the same yield. The dollar amount per share increases, or should increase, by about 10x. And that's because now you own 1/10 of the shares. Your total weekly payout doesn't necessarily change because of the split. Option premiums, however, can get interesting. The big question, does NAV erosion go away? No, reverse splits don't remove decay. This is still an options income fund, not magic. But price movement does get smoother, and psychologically, that helps a ton of retail holders.
instead of watching it fall from
$4.05 to $3.95, you're now watching a price change of $4.50 to $39.50.
feels cleaner, looks more normal.
My position going forward, personally, I'm holding.
I've collected over
$2,100 in dividends so far, and even though the NAV has dropped, this is the experiment. This is the YOLO. I'm not selling the day before a reverse split. Never have, never will. I want to see what happens. What I'll be watching next week, how Monday's open handles liquidity, where premiums land after the recalibration, how fast spreads tighten, how the weekly dividend adjusts, whether traders panic or stay calm. Next week's video is gonna be massive. Hey, one more thing, if you got value from the breakdown, smash the like button so YouTube pushes this out to more YOLTY holders and dividend hunters. Drop a comment telling me how many shares you'll have after the split. And if you're new here, hit the subscribe button so you don't miss Monday's live reaction and next week's dividend update. Oh, and don't forget, none of this is financial advice. This is just what I am doing with my money inside of ULTY. YOLO out. See you in next week's video.